let me just give you guys a couple more details. We went through a couple of the numbers here. You said 11,000 jobs. Again, 6,200 of those jobs, approximately 6,200 coming from the Global Consumer Banking Group, about 1,900 jobs from the Institutional Clients Group, and around 2,600 jobs eliminated in the Operations and Technology Group and Global Functions. So there's a breakdown, a little bit of a breakdown about where it's going to come from. Noticeably absent there, some of those, trading, investment banking per se jobs. Yes. This is across the board for Citigroup here as a whole company.
Well, Citi's been trying to rationalize itself for a long time. And of course, 2 years ago, they split into two different sections. They tried to get rid of a lot of their non-profitable businesses. It looks like some of the things that they can't get rid of, they're just going to eliminate at this point and stop having it drag down the bank's earnings. But 6,200 jobs may be spread out around the world, as Dom said, in the Global Consumer Banking Division. So in that case, it may not be as much of an impact in the United States, but it's not the kind of news you want to see, especially as we try to figure out whether the economy is going to start adding jobs at a clip enough to bring down the unemployment rate. We also don't know over what length of time these jobs will be eliminated, but if it's all coming before the end of the year, it's not going to be good news for the end of the year employment reports.
Well, it's interesting only because we have ADP private payrolls today. We got a huge jobs report coming out on Friday, and remember, it was just about a week or so ago we brought you the highlights of the Bloomberg quarterly investor poll, and about 7 out of 10 respondents there still thought that in 2013 the biggest Wall Street banks were going to keep on cutting jobs. So maybe this is just more evidence that perhaps
it may not be something that suggests that the Wall Street banks are in trouble. It may be something that cheers investors over the long run, because then the banks become more profitable. If they become more profitable, then they can start lending again. And if that happens, then the overall economy is better off. But for the 11,000 people losing their jobs, it isn't good news.
No, absolutely not good news. And it was interesting because we were having a conversation with Jeff Blau, one of the big New York property developers here, and he said, he sees expansion among several companies in different industries, media, technology, retail, but not in financial services. That's the only one that he sees where actually it is still shrinking, as is evident by this news.
Well, you're seeing it in banks around the world. The regulators are cracking down. After the financial crisis, it's become much tougher to do the kind of banking that was done, and so they're turning back to their core competencies. Not exactly in the biggest banks going back to just lending. They're still doing a lot of trading. A lot of the other financial supermarket aspects of the business are going away, and they don't need as many people to do that.
And it's going to get tougher, right? I mean, we've seen the Wall Street CEOs go down to Washington. We had Lloyd Blankfein, obviously, from Goldman Sachs last week. You've had hedge fund managers meeting with White House officials. It's only going to, on the regulatory front, and Mike, you can speak to this very pointedly, only going to get worse for them on the regulatory front, and the possibility of having to shrink their businesses down even more.
Well, it's a new world. They have to evolve. They have to adapt. 5 years from now, they're going to have a different business model than they do right now. They grew like crazy during the post-Glass-Steagall years, and now it's a different world. It's going to require a different kind of banking, a different kind of structure. Costs are going to be different. Eventually, it'll all even out. We'll pay more in our fees. They'll make some of that money back, but they've got to find a way to pay for it.
Well, what's interesting about that whole discussion right now is how the markets are viewing this. Remember, the S&P 500 financials, one of the best performing sectors so far this year. That's after getting beaten really, really hard last year. Yeah. So the question then becomes, at what point does the market right price what these stocks are going to do? Are they saying that the prospects are better with these job cuts going forward? Will they continue? If the cost cuts do keep on going forth, does the banking sector become more like a utility sector? Is that the way it's supposed to be going forward? That's going to be key.